Now, if you're going to try and trade this in and out, okay, might I suggest you keep an eye on this weekly MACD, and you might wrong foot yourself, timing, trend following, it's all very difficult. And you can see exactly what happened here. And it was a 34% drop before, in actual fact, it just increased. And a lot of people would have got out right at the bottom. And so how do you avoid that scenario? Well, if you're worried, it's a sliding scale. What you can do is take some money off the table. If it drops X%, sell Y. It's not a binary decision, all or nothing. It's a mistake that private clients often make. They think everything is binary. I'm either in or I am out. It is not the case that it needs to be binary, one or the other. Okay, so what do we have with something like Meta at the moment is, depending on your risk appetite, you can say to yourself, right, you know what, if it drops 5%, 10%, 15%, 20, 25%, I will sell Y%. The mistake private clients make, private investors make, is they foolishly think they've got to be perfect and get it 100% correct as if they've got a time machine. They don't. They should be making decisions based upon their risk appetite. Got it? If you do it on your risk appetite, if it drops X%, sell Y. Stop trying to predict. You're not supposed to be listening to crappy newsletters who will say to you that they know the future. Instead, now I don't know what's going to happen with this. This may well do another 34% drop as it's done before. From its highs, when people were already counting how much money they had, it's dropped 17% so far. We know it can do this. We know it can drop 34% in no time and make a V-shaped recovery and go even higher. So if you've had bumper gains, you might say, you know what, do what Warren Buffett does. He doesn't sell all out, which is what retail clients get completely wrong as well about the man, thinking, oh my God, he's out of Apple, he's selling the market. Retail clients tend to think in black and white, on and off. In actual fact, investing is more a sliding scale. So if you are risk loving, you would just stay in this. If you are risk averse, you would sell 100% of it. But you can write on a piece of paper, 5% drop, 10%, 15, 20, 25, 30, and write down how much of it you want to sell based upon that. Okay, do not try and predict the future. If you want to really try and get a traffic light idea of where we are, well, look at this. It's exactly where we are. Okay, see that period there that I'm circling? Okay, it's exactly identical to this period here, and therefore, does that mean, Alpesh, we're about to get a 74% drop? Possibly. Does it mean we might get a 34% drop and then a rebound? Possibly. How do you protect without knowing what the future holds? Well, you can either say,